Let's talk about tax write-offs for charity. How do they work and how do they save you money? If you've ever donated to a cause you care about, you might be eligible to deduct those donations on your taxes. Today, I'm going to break it down step by step so you can make sure you're getting the most out of your charitable contributions. Let's start with the basics first. A charitable tax write-off allows you to deduct donations you've made to qualified nonprofit organizations. These can include cash donations, goods, or even volunteer expenses in some cases. For example, if you donate $1,000 to a local charity, that amount can be subtracted from your taxable income. So if you earn $50,000, you'll only pay taxes on $49,000. Now, not all donations qualify. This is the need to know. The organization must be registered as a nonprofit for your donation to count as a tax deduction. You can't write off donations to individuals, political organizations, or crowdfunding campaigns that aren't tied to a qualified charity. Always double check the nonprofit status. Most organizations will state this clearly on their website or receipt. And there are also limits to how much you can deduct. For cash donations, you can deduct up to 60% of your adjusted gross income, or also known as AGI. Now, for non-cash contributions, the limits vary depending on the type of property donated and the organization. For example, if you donate clothing or like household items to Goodwill, the fair market value of those items is deductible. And also, here's a pro tip. Keep good records of your donations. For cash donations, a receipt from the organization, a canceled check, or a bank statement is enough. And for non-cash donations, you'll need a detailed receipt listing the items you donated and their estimated value. If the donation exceeds $500, you'll need to fill out a Form 8283 and possibly get an appraisal for higher value items. Now, what about volunteer work? I get this question a lot. While you can't deduct the value of your time, you can deduct expenses directly related to your volunteering. For instance, if you drive to a volunteer site, you can write off mileage at the IRS approved rate. Supplies you purchase specifically for the organization, like food for a fundraiser, all of that is deductible. Now, let's make life easier when it comes to tracking your charitable donations and other tax-deductible expenses. This is where QuickBooks really shines. It's a fantastic tool that organizes all your financial details in one place. Whether it's scanning receipts, categorizing expenses, generating tax reports, QuickBooks has your back. And you can find my affiliate link in the description. Before we go further, I need to mention that I'm not a tax professional, but I've been doing this for a really long time. So consult with a tax expert for advice tailored to your situation. Another common mistake I see people making is assuming pledges or promises to donate count as deductions, and they do not. Only donations actually made by December 31st of the tax year qualify. So if you're planning to donate, make sure you follow through before the deadline. Another really common mistake is undervaluing non-cash donations. For example, when you donate household items, the IRS allows you to deduct the fair market value, not what you originally paid for the item. A lot of people mix this up. Tools like QuickBooks can help you keep an organized record of these values, making tax filing smoother at the end of the year. Charity tax write-offs are a win-win. You get to support a good cause and save money on your taxes. Just make sure to follow the rules, keep detailed records, and maximize the benefits. If you want to take the guesswork out of tracking donations and business deductions, I highly recommend QuickBooks. Again, the link will be in the description. If you have any further questions about this or other tax topics, drop them down in the comments. Don't forget to like and subscribe the video, and I'll see you guys in the next one.